Optimism improved overnight after reports U.S. and Iranian officials will meet in Doha to implement an interim peace agreement, easing concerns over Middle East tensions and energy supply disruptions. No major economic data overnight. Markets were instead focused on the upcoming peace talks and also the ECB's Sintra forum, where AI is on the agenda and the U.S. Fed Chair Kevin Warsh is expected to speak. This week's key U.S. labor market data also front of mind, and it culminates in the non-farm payroll report on Friday, our time. The EU and China agreed to 3 months of talks to try to avoid a trade war over the bloc's mega annual trade deficit with Beijing. The two sides issued a joint statement covering 4 areas, including export controls on rare earths. Chinese exports to the bloc outweigh imports by €1 billion a day. 10-year Treasury yields finished up 1 basis points. The U.S. dollar was broadly steady against major currencies. The yen hit a 40-year low against the U.S. dollar, sparking expectations for currency interventions once again. So this is the trade. Let's get across the charts that matter. Hebe Chen is from Vantage Markets. Hebe, welcome. Lovely of you to join us. We've had a lot of fundamental news around A2 milk lately. Special dividend being paid, also that approval coming through for 2 of its products in China, which is allowed for this special dividend. So what are the charts telling us?
Well, yes, indeed. I think A2 is the one that I think there's quite multiple reasons to look at. I think number one is a staple play, and staple is one of the best performing sector in the first half. And second one, as you mentioned, they just have received probably one of the biggest catalysts for the recent history that they get into the Chinese market with a green light and with the A2 brand as well, which I think that will help them to making the story shifting from a defense staple story to the catalyst. And especially we are expecting that they will showing quite strong numbers in the next earnings. The technical chart also showing that backing up that shift as well. The stock has rallied about 42% this month, which definitely tell you that investor is that interest is coming back. And most importantly, from a technical perspective, is that 42% up has clearly broken out of its recent downside channel. And now we have the 20 days and 50 days moving averages start tending higher. You can see the pivot here. While the momentum indicators such as KD and MACD also improving, PE ratio is improving as well, even that it still stay at like a multiple year high low level. On the upside, I would expect the resistance around 760, then A08. That's the biggest test sitting just near the price gap there. I think overall, all the signs, the indicator moving averages are showing that momentum has improved materially after the green light from China, after the recent rally. But I think after such a sharp rally, some consolidations, which I think that will focus on the A10 level, that will present the major resistance. But if the price get to overcome this price gap, I think that will open up the door, open up the floor to read back into the previous high.
So that is quite the outlook for A2 milk. I'd like to stick with the other ASX company on your radar, which is Goodman Group. Obviously, it's benefited greatly from the data center thematic, but it's also had to spend a whole heap of cash to really get it closer to those ambitions. So again, is there a trade in this one?
Well, yes, I think that for the first half, what the Goodman Group has shown is its resilience. If you compare to the Goodman's performance, the first half is up about 5%. Not that much, but if you compare to the whole sector, it's down 5%, which is showing that the resilience there. And I think that also back to what you just mentioned about that, supported by the data center expansion, rental growth, and resilience earnings expectation there. Well, technically wise, I think the big picture here is it looks like a bottoming recovery. The stock has rebounded about 30% from the April low level, and now testing the downtrend line that starts in early 2025. So this downtrend channel has been there for over a year. So overcoming this level, I think will means quite a big sign for the return of the bull buyers. On the other hand, I think that they will bring the 32 to 36 consolidation zone areas that back in focus. As you can see, the price used to stay in this price range for over 5 months back in 2025. So you can definitely expect quite of the purchase buyers and sellers still accumulated at this level. On the other hand, I think on the upper side above that, I would expect they reopen the path toward the 38 and potentially 40, but it doesn't mean that there's some of a consolidation to bring price back into this supporting this trend line here is also likely. Overall, I think only one sign that haven't shown quite convincing is the MACD. It's still showing a bit of the hesitance and potentially that get into a bit of the overbought area that will trigger the next phase of the correction or consolidation around the area.
Okay, so just sum it up for us. Where are you expecting Goodman to head in the short term? Because a lot of that, that's a lot of information there for us.
Well, I think above that, as I said, that's between 32, 36. I think it's the price area that I expect that Goodman will stay, and I will expect that they won't try to break the level in the quite one or two attempts. It probably will stay there for some time before they meaningfully breaking above the 36 level.
Yeah, okay, great. Thank you. I got it. Now, Bitcoin as well is worth a look. It's just really, continued to suffer and is continuing to do so. Given Fed expectations, given, all of the risk on, risk off moves out there, it really hasn't been a beneficiary. So what do you think the likely trajectory is?
Well, yes, indeed. I think that Bitcoin is the one of the asset that has under the so heavy pressure from the macro perspective, the rate high expectation, also the risk appetite seems to also quite under heavy pressure, and especially after the price down roughly about 50% from its recent peak, after the several round of the breakdown, especially I highlight in the chart here is the triangle breakdown. We have seen that. That happens twice now so far, that the price even that trying to rebound from the April low level and sort of enjoy a bit of benefit from the geopolitical tension, but then it has breaking down below this triangle shape again. And after breaking down the 74 to 75K, the price is down roughly about 20%. So it looks like the pattern that every time the price is breaking down below this triangle shape, there's always about 15 to 25% downside risk here. And this is what we are now seeing, that the price is now down 60K area, that they seems to be that next support is quite near the 52, which means roughly about 13 to 15% downside potential as well. So I think in the near term, the whole downside risk still remain on the table for the Bitcoin. The next support possibly we're focusing over the 52 support area. We can see that in the past history that this level supported multiple times for the Bitcoin prices. So overall, I think the sellers remains in control for the Bitcoin, and for the next round of the rebounds, I probably will focus on 52 to 55K.
Okay, so sellers continue to control Bitcoin. Hey, Hebe, thank you so much for joining us. Really appreciate it.
Thank you, Nadine.
That's the trade. Stay with us. Back in a moment.